I'm Michael Fox, and this is the Prospector News Podcast. And I have joining me returning guest David Erfle of the Junior Mining Junky. Welcome back, David.
Thanks a lot, Mike. Thanks for having me on again.
Oh, not a problem. It's a timely visit back to the podcast. The precious metals market have been up, and then they've been down, and they've been up, and then they've been down. It's been a wild roller coaster ride here for the last few weeks.
Yeah, gold is doing what gold loves to do, and that's whipsaw traders, get traders out of position before a major upleg begins. I mean, we had after an already extreme overbought gold price exploded to an all-time intraday record high at 2152, and it was in thinly traded markets in Asia when that took place. At the beginning of the month. Uh, Prices reversed sharply as traders took their outsized gains, outsized windfall profits, and moved back down to support to $2,000 going into the Fed meeting, and that produced a nasty intraday reversal candle on the weekly chart that understandably brought out the bears in full force, calling for a false move breakout on renewed dollar strength and expectations of a hawkish Fed going into this Wednesday. But Jerome Powell surprised everybody by basically saying that rate hikes have now ended, and more interestingly, the dot plot, which reflects individual members' expectations, individual Fed members' expectations. It suggests now the potential for 4 rate cuts in 2025 and 3 more in 2026, bringing the rate down between 2% and 2.25%. And this announcement of a long-awaited Fed pivot. I mean, everybody's been talking about it for ages, wondering when it was going to happen. It led to a positive response in just about everything, as the U.S. dollar had formed a 4 month head and shoulders top, and it broke down below its neckline at 103, the U.S. dollar index, and started to crater along with bond yields, and took the gold price up $40 within an hour. You saw huge white candles in a lot of these major minor gold stocks, and that took place really quickly yesterday. So here we are Thursday, and we have some follow through buying. But if we take a look at the stock market, the Dow also made uh, an all-time high, but it's failed to be confirmed yet by the S&P and the Nasdaq. And this is all happening on everybody cheering that the Fed is stopping to is pausing their rate hike, their aggressive rate hike campaign, and expecting to cut, because basically, even though they don't say it, they're expecting a recession, and there's all kinds of signs out there that a recession is coming. I mean, if you take a look at the unemployment, U1 unemployment shooting higher, permanent job losses are accelerating. I mean, the better than expected jobs report last week was basically, auto workers and Hollywood, film employees coming back to work. So, there's massive layoffs in shipping. There's soaring bankruptcies, crashing volumes. I mean, this is all pointing towards likely a double top in the Dow, the S&P likely rolling over, as the Magnificent Seven has accounted for 70% of the outstanding performance of the S&P, that's up over 22% this year. So I wouldn't be surprised that this equity party doesn't last too much longer. I mean, the same kind of thing happened, back at the turn of the century when the dot-com bubble burst. Greenspan at the time had lowered rates for the first time, and everybody partied for about a week, and the party was over, and gold stocks really started to go up. Gold started to really go up. So the gold price here is at an all-time high. Yet if you take a look at gold stocks, they're they're the most disconnected from gold that I've ever seen. I mean, you've got equity equity markets at all-time highs, and sentiment extremely bullish, historically overvalued. Yet you have and you have the gold price also at all-time highs. Yet you recently had extreme bearishness and extreme undervaluation in gold miners and super extreme undervaluation in the juniors. This is a great setup going into 2024 for the beleaguered gold stock speculators over the past few years.
Yeah, I would agree with that in a lot of cases. What really surprised me, and I'm curious to hear your interpretation of this, when gold took off, a couple of weeks ago, and had that sharp spike upwards. That was basically the third test of the upper highs. And historically, if you go up three times, it keeps going, and then it came crashing down. Was that, are we to count that last move as that third leg up, or was that kind of like a just a quick whipsaw, and when it goes up here, assuming that we keep going in the way we're going here towards the Christmas break, um, is that actually going to be the third leg up, or have we actually had a fourth leg up?
Well, basically, although gold futures made an intraday all-time high above 2089, a monthly close is required above this level for a technical breakout to be in place. So we've yet to have that technical breakout. Now, the monthly, quarterly, and yearly close happens on the last trading day of the year. It's also at the end of the week on December 29th. So if we get a gold futures close above 2100 um, on December 29th, that would likely trigger a strong advance next year with an initial cup and handle breakout, because this cup and handle's 12 years old now, and a cup and handle target of 2500 and Fibonacci measurements, top side being 2460 and 3300. And that could happen really quickly, because based on the uh, if you take a look at back in 2020, gold rose 43% within less than 5 months. When we had that, when the gold price was doubling from 1045 to nearly to 2090. It rose 43% within less than 5 months. So once a gold breakout materializes here after 3.5 years of sideways consolidation, creating this really strong base to support higher prices, gold could gain the same 43%, which would be $2,600 quicker than it did back in 2020.
That would be a remarkable gain, and one that those of us that have been in this market for a while would certainly welcome. Um, is it possible, just to play devil's advocate here, to look at it? Is it possible it just bounces off the high and goes, and stays in the box, for longer times? But uh, honestly, I just keep watching it, kind of whipsaw back and forth.
Well, everything's possible in the markets, but gold's got the biggest wind at its sails now, which is a Fed pivot on the horizon. The Fed has announced that they're not raising rates anymore, basically, and they've also announced that they're going to be cutting rates. So that's the biggest win at gold's back. But you also have to factor in the geopolitical ramifications out there that are simmering. You've got the war in Ukraine still raging. You've got another war in the Middle East raging, and you're going to have arguably the most contested election in recent times coming up in the U.S. I mean, you've got a Democratic candidate now that the Republican-led House has now passed impeachment proceedings, and you've got a GOP candidate that the Democrats are trying to put in jail. So I wouldn't be surprised if neither one of these candidates even is a presidential candidate by the time the presidential election rolls around. I mean, let's face it, Biden is not the sharpest knife in the drawer here. I mean, he's just reading off prompters, and he has a hard time doing that. And he basically signs everything put in front of him. And then you've got Donald Trump, who's doing everything he can to be hated by the left, and they're trying, like I said, they're trying to put him in jail. So once this election, if it is, you know, once this election finally takes place in November of next year, I don't see either side accepting the outcome, because you've already seen both sides heavily contest the election. Hillary Clinton heavily contested the election 2016, and Donald Trump heavily contested the election in 2020. So, this is all very gold friendly. I hate to see the gold price go up on geopolitical reasons. I mean, the reason why it ran up to 2152 was because of a terrorist attack on US warships in the Strait of Hormuz. So, and when the drones were shot down and it didn't escalate, the gold price came off $138 by the end of the week. So, you want to see the gold price go up for the reasons of why it's going up right now, which is economic reasons. And the Fed just basically, I think, put a solid floor is putting a solid floor now at $2,000 an ounce, and that's been solid resistance for the past 12, 13 years. So 2000, which was formerly, solid resistance for 13 years, becoming a solid floor, that is hugely bullish for not only the gold price, but these gold stock juniors that have been in the toilet for so long. So, this is pretty exciting, but you just have to make sure that you're holding the right companies, because there's just too many juniors out there right now that are de-risking marginal deposits that think they're going to get taken out by a major at some point. And, I got news for them. Most of them are not. A lot of these are lifestyle companies, and they need to just go away. There are just simply too many juniors attempting to de-risk these marginal precious metals projects, while most are trying to convince a market that's devoid of retail generalist investors right now that a mid-tier or major is going to come along and buy them. But the reality is that very few of them have discovered anything that a major or a mid-tier would even look at right now, because they're not large-scale deposits with blue sky potential. So, I mean, recently we've seen several mergers of equals, which is very positive for the sector. But many of these lifestyle juniors remain, and they should be avoided. So, if you're accumulating companies right now, which you should be accumulating a basket of juniors, you've got to make sure that you're holding the right juniors, because I mean, global miners right now, they're patiently waiting until a lot of these juniors that are de-risking these multi-million ounce gold deposits with blue sky potential are so desperate that they have zero bargaining power. Then and then they expect them to take them out at bargain prices. So this is why it's so important to concentrate on quality juniors, de-risking large projects controlled by these serially successful management teams that have done this in the past, with access to capital in these very tight capital markets. And they've got plenty of their own skin in the game to dissuade take under bids. So we've seen a few of these take under bids recently, where these companies spend hundreds of of dollars de-risking these projects, and a management team comes in that doesn't have very much skin in the game and practically gives away the company to a material or major.
Yeah, unfortunately, that's the
I'm
reality in
sorry,
our
I'm going off on
sector.
tirades. I don't know if you had other questions for me, but
No, but
you
no,
know,
no, that's actually an appropriate tirade, because the question I was going to ask is the higher gold price going to raise all ships? And you successfully answered that question preemptively of me asking it. No, it's not. And it's a good opportunity for those that are skilled at stock picking to find winners in the mess, because they're going to be the types of companies that are going to move first. They're going to be the first movers. And you're right, those other kind of more lifestyle companies, they're going to be, if they move at all, they're going to be lagging way well behind the pack.
yes, because
Um,
there's only so many checks these capital, these banks can write. And a a lot of these companies, you see them raising capital that are even fortunate enough to raise capital now. Some of them are raising, keep the lights on money, $1.5 million. That's keep the lights on money for a year for a junior.
No, that's true. It is. Although I have to say, at least they're raising the million, a million and a half, because 6 months ago they weren't even getting close to that. So, there are some positive signs that are coming back into the market. But let's take a step away from gold here, because the silver market acts, independently of the gold market, but it kind of has a little bit of echo to the gold market. What are you seeing in silver?
Yeah, the reversal candle in silver was even nastier. I mean, it went down 10% last week. But we're starting to see some buying pick up here because of what the Fed just did. So we need to see the silver price and the miners together outperform the gold price consistently on a breakout. So that would be very bullish for the sector because the silver and the miners tend to move ahead of the gold price in bear markets and in bull markets. So if the gold price is gonna correct, usually the silver price and the miners correct first, and that's what happened just recently after we had that huge move. We last recently, where we had the GDXJ was closed above its upper daily Bollinger Band 5 sessions in a row. And a Bollinger Band was designed to keep the price within the bands 95% of the time. So 5 times above the daily Bollinger Band, you knew there was going to be a sharp correction, and indeed we had one. But that correction was bought pretty quickly after the Fed came out with their monumental news of basically saying that we're done hiking rates, and now we're looking at when we're going to start cutting them.
Yeah, that seems fair. Some of the analysts that I follow in the silver space have suggested that the all-in sustaining costs of an ounce of silver is around $26. So to my mind, we need a silver close that's above that to get the miners in the silver space to start moving. Am I right, or should they be moving before that?
Well, yes, and you saw a huge move in the SILJ yesterday. But yes, that $26 has also been strong resistance for quite some time. And if you take a step back and look at the bigger picture in the silver chart, in the silver price, if we get a close above 27, it can move to 30 really quickly. And there's not a lot of resistance between 30 and 35. So, silver moves really quickly, and it could take you out of position even quicker than in gold stocks. Plus, there's not a lot of silver juniors out there that are really worth investing in. There's really only a handful of them. So I mean, you have to get if you get into just a couple of the right silver stocks, you could do really, really well. I mean, in the 2008 run up, my two biggest gainers were Silver Wheaton and First Majestic. Fortunately got into those companies at the lows, and they became, 25 baggers for me. So that's what can happen with the right silver stocks, but you have to make sure you get into the right ones, because if you're in the wrong ones, you're holding not only holding dead money for a long time, but you could lose your money because most of these silver juniors just aren't worth investing in.
No, no, they're not. If people want to continue to follow your musings on everything, I know you do provide your paid subscribers stock picks. How would they reach you, and how would they follow what you're doing?
Sure, thanks, Michael. Yeah, go to juniorminerjunky.com. It's junkie with a Y. And also, I have a weekly column at Kitco. Comes out every Friday.
Wonderful. Thank you for joining me, and best of the holiday season to you and your family. And I look forward to having you back in the new year as we take a look forward into 2024.
You too, Michael. Happy holidays to you and your listeners.
Thank you. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.